On that note, let's welcome our Alpha Manager for the day. We have Raunak Onkar of Parag Parikh Financial Advisory Services Mutual Fund now joining us. Raunak, hi, good afternoon. Thanks a lot for joining us. What a turnaround for the market over the last 2 months. Less than that, actually. And now it's broadening as well. Earlier, you could complain it was a narrow market. Your thoughts on what next and how to approach this market now?
Hey, thank you, Anuj and Surabhi, for inviting me. I think we have had the same philosophy of managing our fund. We don't have too many changes in the fund as well. What we are doing is wherever in the portfolio stocks we are finding that they are reasonably priced, we are adding in those areas, especially in the auto, technology, in the pharma space, even overseas securities where we find that value is still available, we have been adding there. Whereas the coverage universe remains constant. So for the benefit of a coverage universe is that you have a set amount of data you have to go through anyway. So in that, if something comes up in your radar at a reasonable valuation, you can definitely take a call. And at any given point, have 25, 30 ideas which you find are the best ideas out of your entire coverage universe, which you can invest in. So I think we are more or less in that same category as we were a while back.
Okay. Raunak, I'm going to go back and talk to you about the exposure that you have in, one of India's largest auto companies, but through its Japanese parent. We always talk about that, Suzuki Motor Corp. Now, I mean, we were speaking with Mr. Bhargava just this morning. It's been a long slump. It's been a long downtrend. And the Indian listed stock here, Maruti, still struggled. Have you bought more in this downtrend? Have you increased your exposure, or are you at all thinking of paring it down? What thoughts on auto and Maruti?
So data points, sometimes they have a cyclical lull where data points may not be encouraging. The reason why we purchased the foreign parent company instead of the domestic company is that you get to also participate in the two-wheeler market that is there across the world. Plus, you can get to participate in the assets that they have invested in India as well as anywhere else. And you also get to participate in the Indian Maruti Suzuki story. So I think from that point of view, the valuation of the parent company has not been that expensive, and we have been adding in the portfolio in that particular stock. I think it's an opportunity to buy if we are confident that there is a longer term trajectory for India to grow, and if we are thinking that the auto industry is part of the discretionary spend and it is trending to grow, then we should be positive on that company as well, and we'll keep evaluating as the volume numbers keep coming up. So 1 month's data point or a few months data point does not really indicate a strong trend. We have to keep monitoring it over a long period of time.
It's been a dream run for two of your, biggest overweight stocks, ICICI Bank and Axis Bank, Raunak. You reckon there's still room, especially in ICICI Bank after this move from 300 to 400?
I think valuations, if you do a comparative analysis, those valuations relatively are still cheaper as compared to the frontline, better quality banks which are perceived, which did not have too many issues in terms of corporate lending. I think more or less as the balance sheet gets cleaned up, as the franchise growth is anyway available, the company can keep growing in the existing markets that they are growing in. I think it becomes difficult for the smaller banks to play catch up, but the larger at-scale banks have the room to keep growing. Because each and every time we look at the broader perspective as to per capita banking exposure and all those things, the numbers look so different as compared to the global countries. I think we still have a room to grow, and not to give a call on the valuation, but we'll have to wait and watch as to when the trend is reversing, or is the growth going to slow down for these private sector banks. Because there is a lot of market share still being ceded by the larger public sector companies, banks.
Raunak, right now your portfolio is so heavily skewed towards financials. I mean, I'm looking at obviously HDFC Bank, ICICI we just discussed. There's also Bajaj Holdings. I mean, that is again your route of taking exposure to, I'm guessing, the financial services business, finance and FinServ in that group. So is there any rethink at all happening, or are you happy with this absolute overweight stance on financials? Nothing else catching your eye of late, whether it's a consumer or maybe the cyclical part of the market?
So consumer, we have been like a broken clock, constantly saying that it's been very expensive. We are not finding it comfortable to buy into consumer kind of companies because the valuations are still outstretched. What we see in financial services is the same trend playing around. In fact, we are also positive on the technology side in the financial services, because as companies become more tech savvy and they can get far more people or exposure to far more people by using the same technology, and same costs can be distributed across a larger number of customers. And those advantages are also available for at-scale businesses in financial services. At the same time, the technology businesses like Alphabet, Facebook, we have already bet on them, and these are doing quite well in terms of performance of numbers, volume growth, and also the acceptance of these platforms by advertisers.
You still keeping the faith in Hero MotoCorp, Raunak? Because you know the evidence of the recent sales and all the commentary that we are getting is quite negative for two-wheelers in particular, in general, and Hero Moto in particular.
So that's fair. So if you look at the shorter term numbers, there will be some cyclical dips in terms of growth, or even the volume growth will not catch up as to the past trends, which is obvious because the size of the company is so large in terms of how much volume they generate. I think over a long period of time, I still believe that two-wheelers is an interesting place to be in. So we are also exposed to Bajaj Auto via the Bajaj Holding investment. And two-wheelers, and the same idea, like if you really feel that discretionary growth is part of the country's growth in the future, these are some of the ideas you should be invested in.
Okay. Raunak, you know, what is the sense overall in terms of liquidity flow? This rally has been obviously driven largely by FII money. But now that we are at these kind of levels, are you seeing a lot of interest back in HNI? I mean, what's the general sense and the mood like out there?
So we have seen fairly steady inflows in the mutual fund. Of course, we are a far smaller fund house, and we are growing at our pace as distribution reach increases and our portfolio is stable and delivers the returns that we are supposed to deliver. I think from that point of view, we are seeing stable returns, nothing abnormal or something that we have seen untoward in terms of the flows as such. But it's all right. I mean, whatever the market growth has been there, it's always been there, and you will find some moments, some short-term news or short-term data points which will be disappointing, and people who trade on the basis of those data points will probably don't want to participate. But I think longer-term trends, if you are invested with a longer-term horizon, you will still find ideas to invest in at a reasonable value. So I don't think there will be a problem in terms of flows.
Okay, by the way, just keep an eye on a stock like CG Power in a very strong market. This one's making lows of the day and on a consistent basis. Just pull out that stock once again. That's down about 4.5%. On the other hand, you have an IRB Infra which is making highs of the day. That one's up about 9% right now. But CG Power is down about 5%. Raunak, you know, you have very large chunk of Bajaj Holding in your portfolio. I'm sure you would have read this recent story on what's happening within the Bajaj group. Of listed entities buying into each other's shares. Your thoughts on that?
So I think there were some media articles a while back that there has been some agreement between the promoter family in terms of distributing the business across various family divisions. I'm not sure exactly what are the details of that, because even we have not been able to verify or come across any details in the publicly reported domain. But I think that was anyway a consolidation supposed to happen in the business, because now they have controlling interest in Maharashtra Scooters, as Bajaj Holdings is also another holding company, and we own both of them. I think our idea of buying them was not to just play on the family passing the shares amongst each other. The whole idea was to buy the underlying companies which we like at a discounted valuation, and the trend that it will close the gap between the underlying value as well as the market cap of the holding company. And that was the original idea, and still has been. So we have been invested in for a long time. I mean, both the ideas, scooters as well as holdings.
Okay. All right, Raunak, then we'll wrap it up on that note for today. Thank you very much for joining in and giving us your thoughts. Absolutely no changes in their portfolio. It's Parag Parikh Mutual Fund. They are staying invested, and of course they take a huge amount of exposure to US tech as well by directly investing in stocks like Facebook, Amazon, IBM and the likes, and that trend is continuing. It is intact. Well, for the bulls, it seems they've taken a bit of a breather. They've taken a bit of an afternoon break because the market is now slightly stepping away from that level of 11,760, thereabouts, 50 points away from that record.